Name is Raleigh White, and I'm sitting in for Celeste Lindman this week, who is traveling today. Now, I know she's got some tough shoes to fill, and I'm going to do my best for you. And on that note, we have a great session lined up for you today, and I'm pleased to share that Tom Busby, Scott Welsh, and Jeffrey Turnmeyer will also be joining us for their commentary. Now, this past week has been an interesting one, largely due to the fact that nothing has really much happened in the markets to move it in either direction. Now, earnings season got into full swing after the major banks surprised by posting strong results early in the week, but that's been somewhat tempered by disappointing news out of Tesla and AT&T yesterday. And on the economic news front, things really got rolling on Monday with much better than expected Empire State Manufacturing Index data, but that was then interestingly offset yesterday by worse than expected data out of the Philly Fed Manufacturing Index. Interesting, the two areas where the states are closely connected with one another have two totally different outlooks for the immediate future. Then just this morning, I noticed that the flash manufacturing and services PMI beat expectation, showing expansion in both sectors. So from my perspective, contradictions abound, and it just kind of feels to me like all eyes continue to be on the Fed and what they may reveal at their May meeting, which is coming up in just a couple of weeks or so. And then, of course, there's the looming dark cloud that is approaching on the horizon around what's going to happen with the lifting of the debt ceiling. And with that, let me kick it over to the panel for their takeaways on this week's going on in the market. And Tom, let's start with you, my friend. What were your thoughts on this week?
Well, you pretty well captured it. It was like a whole lot of nothing. The market itself, tried to go higher at the start of the week, came down, tried to go lower. And today it did a little bit of both, up a little bit, down a little bit, and it's sort of spinning right now. So this is where a lot of people will lose a lot of money because they anticipate something happening. And I agree with what you said. I think it's sort of we're sort of being held captive right now with earnings coming out. You got the tech earnings that are going to come out, and then you got the Fed meeting, which I don't know. I saw one deal hit the financial news when it was down. The Fed is anticipating to continue to raise. But all you had to do is look at the CME watch tool. It was at 85% all month. So yeah. I don't know where everybody was that they were anticipating. It was right there. They're going to raise a quarter, and that's just that's the kind of silliness that you see in these type markets. But I think the smart people, and I mean the smart people, are people that wait, show some patience, and then look for the opportunities where there's what I would call the high probability attacks. I've lost a lot of money in markets that do this. Okay. And this market right now is a market that's doing this. So it brings in a premium type capture this week is, work good. But other than that, it's just, it really is sort of interesting to watch.
Absolutely. Dangerous for people that like action in the markets. There's no doubt about that.
Absolutely.
Hey, Scott, how do you feel about things? You agree with what Tom said there? Do you think things are just moving sideways? What are your thoughts on this week?
Yeah, absolutely. First of all, we all love stories, right? We all love to tell this. That's why we read websites. That's why we try to use fundamental analysis. We want a story. Why is this stock going up? Why? Well, if you're reading stories this morning, I read another one, prominent experts saying tech is going down 20 to 40%. Okay, 20 to 40%. That sounds bad. And then you look at the chart and it's not going down 20 to 40%. Tech has been doing okay. That's a little mixed. And then you look at, wow, tech has been going up. Why are they doing so great? Oh, they're laying off tens of thousands of people.
Right.
Like, that doesn't sound good. Like, how is failing one of my courses going to help me pass the other course? It seems like, and the people who got fired or laid off, they don't think it's a bull market. So, Mr. Busby couldn't be more right. Tom was right on. This is just back and forth. And I feel like we're all a bunch of kids in the backseat saying, are we there yet? Are we there yet? When are we going to get there, mom and dad? And the only way for me is to look at the charts and to be patient, just like Tom said.
Outstanding, Scott. I agree. And Jeffrey, your thoughts there too. Are you on the bandwagon with the rest of us?
Well, I mean, I've been kind of bullish since October. I've been on Ask the Pros with Celeste talking about it. I kind of predicted the bottom a little bit and kind of called it live on here. And it's been up. Now we are up to a key resistance. We topped in the, just above here at 4,300 back in August. And we're having some heartburn trying to work up through this. There's lots of good, lots of bad. I brought some charts I can bring up here in just a few minutes when we get to my main segment, and we'll show what the good things are, what the bad things are, how the debt ceiling might play out. We can debate on interest rates and all this stuff all day, but I think Tom and I both agree. How do you make money? We're here to trade. We're not here to debate what the interest rate's going to be. So
absolutely. So this being in this wait and see and hold mode is kind of a tough thing for us to do because we're almost like the market wants to react to something external. But I know that there's some ways we can deal with that. Jeffrey, why don't we stay with you and have you share a little bit more on your thinking about the markets?
Yeah, let me go ahead and let me pull this over and share my screen, and we'll just go share a few things here. And here we go. And Scott, I just want to say, nice to see you, man. I haven't talked to you in a coon's age.
I miss you, Jeffrey. I miss you so much it hurts.
So we had tons of earnings this week, as we said, a lot of banks, a few tech like Netflix and Tesla. And, we don't really have a feel for how this is going to shake on out. So this is just the first major week of earnings. Now, let's jump into some talk about the debt limit. We've got the debt limit right there at $31.38 trillion. And the green is our cash balance. Now we're going to get a little more cash balance as income tax receipts come into the IRS here, for the next month or so. But what we're seeing is about 30 to 35% less tax receipts coming in this year than we did last year. Where's that income?
Where's that income? Yeah.
Yeah. I pay my taxes off the top. I don't pay it after I pay for groceries and all the inflation stuff. So that doesn't really fit with the BLS narrative of more jobs, more high paying jobs than we've ever had. Something's not fitting here. This is Goldman Sachs's estimate that we may see the cash balance run out in July. That's
Okay.
before the narrative going in, everybody in Congress that I hear is talking about September. Well, the Goldman projections for running out in July. And if these April, May, June receipts come in less, we could break it right here on this spike. This one could hit the debt limit and we'd be out of cash and in a jam way before anybody's expecting. So this is something to keep an eye on. Back in 2011 in August, when we had a similar situation, the market saw a big drawdown. So that's something you want to be prepared for. You want to keep it in the back of your mind that we may see a large drawdown if we hit that debt limit. So
do you think any of this is priced into the market at this point in time, or is it still too far out on the horizon?
I feel like it's if anybody's thinking they're pricing it in, I think there's too many people playing it the other way too. Volatility has come down. We're at the lowest volatility we've seen in almost 2 years right now. Like I'm talking about VIX. And so really it's hard to sell those puts. It's hard to sell those calls. All that, priced in volatility is really low right now.
Mm-hmm.
Makes it difficult to, right now I'm actually looking for an opportunity to start positioning for longer term VIX structures out to encompass all this chaos that's potentially could come into the market. It's just a protection play. It's not really a trade. It's more of a protection type play, just in case something happens. And then bring it over here, just to complete the conversation, the cost of US debt has just tremendously increased. We're looking at $800 billion right now, just to service the debt. That's just on the back of the interest rate rises right there. So we keep raising
Tom,
rates.
it reminds me of Ross Perot when he used to come on and show these charts.
Yeah, it does.
We keep raising rates right here. This cost of debt just keeps growing and growing. It just exasperates the problem. So it's kind of like a self-fulfilling prophecy of problem with the Fed. Now, looking at the actual ES here, as Tom said, we've just been stuck in the range since Friday. This was Friday last week. that's candle, the high and the low, we have been inside there for 5 days now. And you look at the day before too. I mean, if you search back 2 years, 3 years, you're not going to find where we're stuck in this tight of range on ES and for 5 days in a row. So
Yep.
I am, zooming out just a touch on here. If we break out to the top, we're probably headed up to that 4,300 where we topped back in August. And if we break down, we're probably headed down here to my support line around 4,000. So it's a pretty big trading range that we potentially have. So that's bullish
Sure.
case, bearish case right there.
Man,
Zooming
that's a
on out,
great,
zooming on out.
that's a great chart.
So
Yeah,
right
'cause
there, we're
where
just
the-
kind of stuck right there. And we could break out to 4,300 or we could break down to that 4,000.
Absolutely. No, that's terrific. And Jeffrey, so from your perspective as a market technician, I know that you look at some fundamentals as well, but as a technician, it sounds to me like this chart right here tells me that you're prepared for whatever the market's going to do either way.
Yeah, right now I've kind of eased back on everything. I'm not super bearish. I'm not super bullish. This is really a coin flip zone right here. We found support once, twice, 3 times, my lady. And are we going to retrace again? Or are we going to break out and go retest that bigger resistance level up here?
No.
So yeah, I do believe in the technicals, and these levels tend to be, tend to hold over and over. We did break the uptrend that we had of the lows that we started in mid-March. We broke out right there, and then we just went sideways. We didn't break down. So that's showing there's some strength, but also we didn't break out, which is showing some weakness. So it's really a coin flip.
Absolutely. Thank you for that, Jeffrey. Scott, I know once again that you look at the markets in much the same ways that the other gentlemen do, and you've got some thoughts with regard to stocks, maybe those that are poised to take off if the market moves. And also you've got your eye on some opportunities if the markets move short. What's your thinking there?
Yeah, I've got some thoughts and I've got some screenshots, whatever. So let's take a look. Can you see my screen?
Yeah, it looks great.
Okay. And how about that? That's even bigger. Is that okay?
That looks perfect.
All
Yeah.
right. I've talked about this. I've been on a couple times, and this is the old famous Stan Weinstein chart. It goes back decades, and it is maybe the only chart you need to know if you don't want to go too deep, right? We have experts on here that can go way into the weeds. But if you just want a simplistic way that seems to work over decades, this is why I shared it. And this is what it came straight from his book, Stan Weinstein's book. And all this is price goes sideways, doesn't know what it's doing, and then it breaks above the 30-week moving average. Then it's had too much and it falls, and that's stage 4, and then it goes sideways, right? It's a real easy way. Guess what? We want to be buying stocks right in stage 2. That's the favorite. You buy them when they're above the moving average line. You buy them on breakouts. You hold them all the way. It's just a very, very easy way to interpret the market. And when things are mixed and it's hard to decide what to do, stepping out to a weekly chart or even a monthly chart kind of calms everything down. In the past couple times, I took Stan's idea and put it on a monthly chart, which guess what? You can do it on a monthly chart too. But we're going to stay pure to Stan out of respect for him. And the charts we're going to look at are going to be all weekly charts this time. Now, I did my white charts. Hopefully you can see them. I did dark charts last time and people couldn't see them clearly. Does that look okay, Raleigh? Can you see that pretty well?
I think this looks fine.
Okay,
Yeah.
Good. I spent extra time on my white background chart. Okay.
There's a lot you have to change when you move the background.
Oh, so much work. My hands are aching. Now, going back to Stan, right? Got that in your mind? Here's Amazon. This is real life. Going back to the .com crash. We saw it break above the moving average. Kind of looks the same. Sideways, albeit very big bars. And then it rolled over, stage 4. Then it went sideways, and then it broke out again. Little tiny winner. And then this one was massive winner on Amazon back in 2003, when the .com crisis ended. So that seemed to look very, very similar. Now, I'm an algorithmic trader. I have been for a while now, about a decade. I fell in love with trading with automated rules. I still take discretionary trades, but I love testing. So I took Stan's simple strategy. I just put some rules on it. And these are super complicated, so everybody needs to pay close attention. 5 closes above the moving average, you buy. That's 5. Why 5? Because it tested right, but you know what else? It makes sure that the trend has changed. 1 pop above moving average, maybe it's going to go, maybe it isn't. I found, and this is blanket across just about any hard trending stock, if you buy it when it's closed 5 times above, you're okay. You can do breakouts, standard breakouts. You can do anything you want. I'm just giving you an algorithmic rule. So 5 closes above, you get in at the open of the next week, right? So you have 5 weeks to make a decision.
Right.
Pretty easy. You don't have to rush. Okay. And then you get out. This is complicated. As soon as it closes below the line.
Mhm.
So there you go. That's the rule. And so that it basically catches it just the way Stan wanted us to. Now he puts volume in it. This doesn't. It's way simpler than that. But this is what it looks like just using the core of what Stan was trying to teach us. This is Amazon equity curve from 1997. And it seems like it's going up and to the right in a diagonal fashion with no other rules than that, just trading $10,000 a hypothetical stock each time. And we're waiting for another little breakout. So that seems to work since 1997. That's pretty good testing period. Here's another stock, one of my favorites, little known stock, Apple. You can see it went up, rolled over hard in the .com, came back, false alarm, came back, and then nearly the same time as Amazon, we got a winner if you close it below, and then you got a massive, that's about a 300% winner there or more, just by waiting for stage 2.
Right.
Okay. And again, just following the simple rules, there's that equity curve. I didn't change the rules. There's no optimizing. It's not an optimizing class. But again, it seems to move up and to the right. So the only reason I show that is for validity, which is not easy to say. Now, what does that mean for us right now? This is my new favorite little ETF to watch. And I've talked about ETFs because we don't have to pick a stock. We don't have to find one. We don't have to look at 8 or 10,000 stocks. We can just look at one. And I give you 3 guesses, and the first 2 don't count on iBuy. It's online retail. Oh, I beat you to it. Sorry, no prizes today. But it's clearly, well, first of all, we had a mini rollover in 19, couple of minor breakouts, and then huge after the pandemic. If you waited for the 5 closes, actually you could have gotten here on this breakout and had a huge win. But then you get out. Oh, look, it got us out just in time for the bear market and wouldn't have lost a thing in the bear market, which is interesting about his system. And as you can see, we're kind of looking, it's back and forth, just like everybody's on the panel has been saying, but it's getting close, right? We're probably maybe a month away from possibly another big move. So no reason to rush, but this is definitely a setup according to that particular way to look at the market. Here's
Scott, Scott, is that a simple moving average, 30 weeks?
Yes. Yep.
Yes.
Simple.
All
I
right.
keep everything simple. Yeah. Exponential in some cases work great. Yeah. This is simple. Everything is overly simple if I can help it. Right.
Well, there you go in the chat.
Okay. Okay. I know everybody always asks that, and I should say that, and I'm dumb. So I apologize. Here's the cows ETF, and it trades cow. No, it doesn't trade cow. It trades cash cows. So if you're a fundamental investor, this ETF is made up of companies that have lots of free cash flow. And that's a metric that people love. As you can see, same sort of thing. We had breakdown in the pandemic and then a very, very nice run. We got out, we missed a lot, but look at this one hasn't fallen. And value has made a comeback, right? And it's done okay, way better than some of the tech stocks. Is this a trade? Not officially, but it's getting close, right? It's in that mixed zone that everybody's been talking about. A few more closes or a break above the 50 level, we might see a big run. So that again is upcoming. And if it doesn't, like Jeffrey said, if we get the bad side of what possibly might happen, you just don't trade with this system. So there's nothing to do. So we got a few weeks to get ready or nothing to do. So that's pretty easy, right? Peloton, I've mentioned before. I mean, what a great pandemic stock, but this is exactly the figure that we talked about, the Weinstein figure. Look at this. It's exactly, and now it's looking like, well, maybe it's ready, right? Maybe it's getting very close. And let me get that out of the way. Hey, get out of the way. All right, I can't see. But there it is, getting very, very, very close. All right. And then let's look at next one. I talked about this one. This is PLTR. IPOs are great if you want to maybe catch a big winner. They're a little more risky. Obviously, you can see these go up and down, but PLTR is obviously above 920. If you want to trade the breakout, officially, according to the rules, it's already closed 5 times above in a very, very tight channel. I mean, if you believe in consolidation, which tons of traders do, if you believe in breaking out of bases, which tons of traders do, I mean, look at this. It's above the long-term moving average, simple moving average. It's 5 weeks above. It's trading in around. I mean, this could be huge. And we're talking about $10 and it's been as high as 40. So again, nothing necessarily to rush out and do anything today, but I drew 920 as a possible. We could look at PLTR with their very secretive internet dealings, right? The government dealings. I love TQQQ. Got a couple more examples. TQQQY, it's a 3X QQQ. Not for everybody. And consult your financial advisor before taking trades on the TQQQ because it moves way more than the typical ETF. But very Stan Weinstein-ish, right? And then guess what? We're 5 weeks above 2750. It's right near that. I mean, we could get a trade on this any way you look at it. If you want to wait for volume, you could do that. But this one could be a big breakout. And I mean, it went from the 20s to nearly 70 or higher before the last time it broke out and stayed above. So I'm very, very interested in TQQQ or the QQQ, same thing. It's been above way more than 5 weeks. This would be a breakout level if you wanted to wait for volume, 320.75. Maybe it gets to the 400 level. As long as it stays above the simple moving, though, you don't have to worry about anything. But you don't really take short trades on this particular system. It's long only. But if it broke below this 259.50 level, if everything gets bad, that is a possible short. Or you could just make it easy and not do anything, right? And overall, here's the SPY. I mean, where are we at? Just what we've been talking about, going sideways, not doing anything. Jeffrey's levels, I think, are fantastic. He talked about the ES, same thing for the SPY, which is the same thing in a different form. A break above here could be really nice. I mean, it's not cratering, but a break below 350 and lower could be trouble. So for me, it's easier to go to a long-term chart. It's easier than trying to follow the stories and trying to figure out where it's going to go because it just makes my head spin. But I like these long-term charts because you don't have to rush and it's very, very simple methodology to follow.
Well, I tell you what, I think that's terrific, Scott. I mean, both you and Jeffrey have just done a great job of setting the table here for the fact that we're in a period of consolidation. We could see a breakup or a breakdown, and there's plenty of room to move down or up. And it's like, what tools do you use to give you that early read as to what's happening? And obviously, Stan Weinstein had some thoughts here. And Tom, that brings me to you, my friend. You know, you are a veteran of the markets. I'm sure you've seen stuff like this in the past. And I know from our times working together, Tom, you know, you feel we're at a decision point. Do you go long? Do you go short? Do you hold? What do you do? And for people that they want to trade, they want to be involved. How do you do that? How do you exercise patience? And what are your recommendations here?
Well, it's interesting because you're always, you know, I've been doing this a long time and you're always looking for an edge, you know, because if you think about it, the easiest way to lose money is just plowing in or plowing out. And I think you got to have a good process and a good plan. And I've been thinking about it for a long, long time because I like simple. I like simple rules and a simple approach. And I really bring it down to 3 decisions. Should I be long? Should I be short? Or should I be out? And if I can not figure out which one's right, but figure out which one's wrong, in other words, then my odds go up tremendously.
Yeah, they do.
And so, you know, mathematically you think, wow, you just eliminated, I don't want to be short this stock. Well, I need to be long or I want to be out. And that's the way I think about it as I did it. So I worked with my team and I said, guys, I've been working on all this stuff for 40 years. I think I got it, that I can give something very useful to people to help make decisions at these points like we are right now. And so patience is not one of my biggest attributes. I'm an impatient guy. And so if I would have waited, I wouldn't be talking about this today. So what I did, I got with a student of ours that I knew could do what I needed. And we put this together and it is phenomenal for getting you on the right side. Entries, exits, when you're right, when you're wrong. And so if you've got a Thinkorswim account, it works within 3 minutes. You can actually, have it located on your computer and ready to go. So it's a pretty neat thing we've come up with. So let me go through this presentation. We released it this week on. We released it, and it was on Wednesday on the web, and it was just like we were slammed for hours and hours, because this is not only good for U.S. stocks, it's good for anything that trades and options. So you place the symbol in here, and it lays out for you. It helps you get in the right box. Okay. And that's the beautiful thing about it. So let me show it to everybody. And we are at a critical point. I agree with Jeffrey, I agree with Scott. Right now, there's a lot of money going to be made if you got the edge on which direction we go. So this is where you study it, and this is where you make your decisions. But it could break out and go way up, or it could get rejected and go way down. And I think that we'll just have to wait and let the market tell us that. But when it does, you'll be clued in by using what I call MTI by DTI, market timing indicator. Little background there. I've been a market timer. I became a market timer 35 years ago when Wall Street said you couldn't time the market. I knew that's where the money was, so I learned how to do it. And so I get a real kick out of it when people say you cannot time the market, because I mean, it's a core to my being to time in the market. But like I said, we're at a critical point, and now's the time to learn. And these decision points are where traders get burned, you lose a bunch of money. I told you to chop up, go in circle, circle. Right now, hand off the mouse, wait, you'll see it, be patient. That's why this new beta indicator, way ahead of schedule. We got it out this week. People love it. I already listen to this. I'm already getting emails from people. One guy sent me an email yesterday, and he said he made a double-digit return. I said, "Oh no, he's trading already." I wanted him to study, but he's a sharp guy, and he tied it in and made a great trade yesterday with it. And I thought, well, it's out there now. Now it's all based on these lines, these 5 lines, okay? And these 5 lines is a simple rule. If you're above all 5, you want to be long. If you're below 5, you want to be short. And if anywhere in between these 5 lines, hand off the mouse. And what I did, because some traders are short term and some traders are longer term. I developed a side-by-side panel with this indicator for getting the trend right, and then going to the short terms for entries and exits. So it's really it's sort of special when you look at it. Okay. So in my 40 years, all this has been rolled into one simple indicator. And I think when you have this on your computer, you'll see what I'm talking about. It's pretty neat to look at things, and it will get you focused on where they're paying you rather than taking your money. And that's what I like about it. Now, when you add it to your trade plan, it immediately helps you answer the most important questions of all of trading: long, short, or out. You show me, and I have confidence in the direction, I'm going to make a lot of money if I get it right, and I'll eliminate the one that's not. And that's the beautiful thing about this MTI by DTI. Now, I call it the market timing indicator. And if you got into gold with almost perfect timing way before most people were talking about gold at all, and people see my track record in gold, I don't even like trading gold. I really don't. And I tell people this all the time, but I go where the money is. Okay. So I'm starting to quote Willie Sutton. He robbed banks because that's where the money is. Okay. And but it gave me a buy signal on gold. So I got long gold, made a bunch of money, like I think 18 trades in a row with it. And if that doesn't scare most people out there, I don't know what else will, because that's kind of backup you got with this thing. Apple's another one. Okay. Apple gave a buy signal around 143. Skyrocketed about 15%. Then it gave another buy signal to get us at our current level. Okay. And I'm watching because it's still sort of in that buy zone. Okay. If it breaks, then it's going to pull the rest of the market down with it, because it's the biggest mama out there to watch, Apple. Now, 153, you can see where we got in again, and we're up to the present level. Now, Here's one that I trade, CVX oil market. Oil market is very tough, but last year I was really long energy. And why was I long energy? Look at this chart on CVX. Bang, 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 buy more, buy more. But that's not the important part, folks. About mid-year, I started telling people, go to the sidelines. Look at that chart.
Yeah.
Right there, right on point. This is the beauty of my MTI by DTI. It gets you in, it gets you out, and all you got to do is remember that one simple rule. Now, and for you crypto guys, Jeffrey knows this to be true. I know nothing about crypto, nothing. But I had Jonathan pull my track record trading MAR and Wright and these stocks. How do I make money with it? I know nothing about the fundamentals of crypto. Matter of fact, he gave me some advice and told me to get out of, I guess, the Bitcoin and move over to Ethereum. Great advice. But I sold out of crypto at that peak using this kind of information. And this is the kind of information you need if you're going to be in the market. But MTR was all over it. Look at MAR, $5 to 12 the first trip, $6 to 13 the second trip. It just gives you can trade any market that's moving. And I'm very excited about releasing it early. I know my team said, no, we don't want to need to release it. I said, we got to get it out there because people need to have this at this decision point in the market. Now, this week, we're releasing it ahead of schedule. We did already. And we'll figure out next week, you'll be hearing about a lot of people with us, if it breaks up or down, where MTI gave us the alert. Look at what happened with the SPY last year. This is another great example. The SPY, if you remember last year, I was telling everybody be short. Well, why was I telling them to be short? MTI was telling me to be short. Look at this sucker. Down, down, down. And then, when do you exit? You got to know. Okay, you got to know when to exit. We got the short term. It identified the short entries all year long. And then the way it works is very straightforward. When you add it to your indicator platform, it's 3 simple steps. I insisted with guys that did all the technology to make it happen. I said, make it simple. I wasn't born with a computer or a mouse in my hand, so it's got to be simple to get on my computer. And I had a guy last night, he said, Tom, that's the easiest download I've ever done through the Thinkorswim platform. It automatically opens up a daily chart and a 1-hour chart side by side with the MTI. And, you know, the steps you go through right here in front of you, you see it, bang, there it is, bang. And it loads these suckers in there. And one guy said, that's the reason he used Thinkorswim. I don't know. I've never downloaded anything there, but it's very simple to use. Took less than 2 minutes, I think, to get it on the computer. Pretty neat. There, now we got it, just like that. The daily chart confirms the trend and answers the question, long, short, or out. And then we move over to the hourly chart for entry, exits, and targets. Now, here's NVIDIA. This is a great example from last year. Matter of fact, the guy that wrote this went back and looked at all his big losses last year. He said, man, if I'd have had this, I would have been long NVIDIA, right? Or I would have been this year, it was long. I thought we were showing the last year's chart where it was absolutely opposite, but it caught the up move 70 or 80% this year on NVIDIA. Look at those 4 lines, 2 white, 2 yellow, be above. And I do have that magenta line. That's a sort of a tiebreaker. That is an exponential moving average up there just to help me look at it, you know, throughout the day and see where it's trading in that zone. Now, if you're above all 4, you want to be long. Below all 4, you want to be short. In between, you stay out. That's simple. You can see on NVIDIA, we want to be long throughout the first quarter. And now it's at a key point, and you got to watch it. The hourly chart confirmed our entries. Off we went. And you can use it for options. That's the beautiful thing about it. You can plug options on the Thinkorswim platform in here and see the actual charts themselves. Pretty cool. Now, over the same time frame, just looked at on the daily chart, definitely you're long. You can't argue with the rules, just how long you would have been in that stock. Now, when it crosses those 2 white lines, you're in, and you're in for the count. Now, as you can see on the hourly charts, give us some fantastic entries this quarter, you know, where you took your profit back down to the breakout lines and you got in again. Count all those trades right there if you like to trade. Okay, that's what you had the first quarter. Now, I've been helping people with market timing for decades. People know that about me. This is the best, simplest, most actionable thing I think we've ever created to help people trade effectively. And you trade any style. That's what I like about it. You don't have to be a short-term trader. You can be a long-term trader with MTI. You can be a swing trader. You can trade commodities with it. If you like trading commodities, it trades at night. This thing keeps up around the clock, 24 hours. So it's built for everybody. We opened up 250 beta user spots. I think, don't hold me this, I think we got less than 50 left now. They'd have to tell me, but somewhere around that. And they wanted me to get on here and tell everybody, I guess, to get it sold up. But it's only available on the Thinkorswim platform right now during the beta period. You don't have to change your broker to do it. Open a what do you call it? A free account they have at Thinkorswim to load it on. You don't need to trade through Thinkorswim. Now, paper money account. In about 2 minutes, it takes you to open, not a lot of information, get it set up, and then you download the market timing entry. So you can be looking at the Thinkorswim platform and trading over here at E-Trade or Tradier or any of the brokers out there. So you don't have to move money over here. I would do it because you're going to find out there's more things you can do with the Thinkorswim account than I've seen you can do with a lot of it. Now, if you put 50 bucks in there, they give you free data. I mean, live data. So maybe put 50 bucks in there or something. I don't know. But that gives you full data to apply if you trade in the short term. But we got a membership area all set up, step-by-step guide, click by click. Again, the download is very simple. We got backup people to help if you need help, where you can practice over the weekend and be ready to go next week. Now, once you downloaded it, you can start using it immediately. It'll help you take your trading to the next level. Now, here's what's going to make it big and different. People know I like to teach in a live market. So I set up 5 classes. Workshop number 1's on long-term trade. I'm going to give you all the rules I've come up with and how to trade long-term with MTI by DTI. Workshop number 2 is short-term trading. And I am a short-term trader from day one. So you'll get workshop number 2 with techniques, rules, and all the things I use, time of day, all that stuff will happen in the short-term trading. Workshop number 3 will be swing trading, where we try to hold things over 72 hours, which is tough in a market like this, but we'll show you where it goes wrong or goes right. That's workshop number 3. Workshop number 4, income trades and other techniques. I love it. I'm doing an income trade today on GLD gold. And, you know, it's pretty nice to be able to have the confidence to do that using MTI by DTI. That's workshop number 4. Workshop number 5, this is where we trade everything under the sun. And I'll give you rules for trading things that are not mainline. For example, if you got a hot sector, I'll show you how to identify it and what's hot inside that sector. Sort of this, I call this sort of the Livermore approach, go where the money is right here. And we might be trading crypto, even though, again, I'll put that disclaimer out. I know nothing about it, okay? Nothing. But that's workshop number 5. You get lifetime access if you join me in my beta club. And so you got it. We'll keep it updated if we make any changes, but that'd only be make it clearer. And I think it's going to help people if they want to get started. Now, we added all the values up. It came to a lot of money. And believe me, over Easter weekend, I was working with my programmer to get this thing done. And so we put the time and effort to get it to you, take advantage of that. And we got it priced now, I think, at $497. It's the bargain of the year. So call 904-416-1776 or go dtitrader.com/MTI. Now, I'm going to require you to do one thing if you do become a member. And it's a very simple. I want to hear about your success. Remember, the live workshops will kick off on May 1st. That's my favorite day of the year. And don't forget, when you take one of these beta spots, you have a lifetime entry into my beta club, the market timing indicator. Now, you want to know where to be long, short, or out? I had one guy went through his portfolio last night. He couldn't figure out what to hold and what to fold. and I got an email, and he said, Tom, I went through it with MTI. I got a good understanding of what to hold and what to fold, thanks to MTI. A guy looking at his portfolio he's had for a couple of years. But it's all kinds of uses, dtitrader.com/MTI. Now, long, short, or out, I've been posing this question for years, and I go from the very small time frame to the long time frame with MTI. Now, if you wonder if it would have helped you last year, and this is what really motivated me to get it done, because it would have. Look at Netflix last year. We talked about how great Netflix was this year. Last year, it was a flat out sell, and MTI would have told you, and you would have said, I'm getting out of this up there, these high levels, as the market cratered, or as that cratered also. Or PayPal, here's another one. It switched from bullish on PayPal to bearish, and it never got trapped in bad trades. A couple examples of last year. Go to dtitrader.com/MTI 904-416-1776. Again, I don't know how many we got left. We're getting close to our limit, but don't hesitate. But this is MTI, and I'm going to tell you, it's fun because it takes up a full screen. I got like, what, 4, 7, 8 screens here. For me to give something that kind of real estate, I think it's important to watch. And I'm sitting here, doing this presentation. I'm looking at the market at the same time. I'm in a gold position where I sold some puts, and I just wait another hour and all that money's mine. So because of MTI, that's just a real life example going on where we're talking. That's it, folks. Any questions? Anybody got any questions? Oh, Adam just said we got less than 40 spots left. I knew we were getting close. These things have been, let me tell you, this is a worldwide application. And we've had people from Canada, Australia, European Union join me. I've never even heard of these people. And they got word about MTI, they're on there. And again, set up your TOS account, set up, even if you don't want to trade through them, have it on a screen where you can watch this stuff. It's pretty interesting to see it develop. And that's about it. That's about all I got to say. Any other questions? Cindy, the price is $497. It's a lifetime price. A lifetime price.
Man, amazing, Tom. Amazing. Jeffrey, Scott, what are your thoughts? Are you seeing this tool for the first time?
Yeah, Tom's been holding out on me. I'm gonna twist his arm, get the link in the background here.
Yeah, I can't give Jeffrey everything. He's still too young, but Jeffrey's a great trader, by the way. And he reminds me, when I was that young, he's got that thirst to learn and do all that stuff. And I'm telling you, that's the kind of person that, you tie into. I got people been with me 20, 25 years, and they bought this on instant. I opened it up. Matter of fact, before we even let it go out, we had people that had been with me a long time. I think we sold like 15 units before we even opened it up to sell. It was selling without trying to sell it. But get it?
Yeah, Tom, you ought to just give me a copy since I gave you all those.
It's a screaming bargain.
Yeah, just give me a copy since I gave you all those crypto trades.
Yeah.
Scott, what do you think Stan Weinstein would think about this? Huh?
I mean, this is like taking Stan and put him on steroids. It's very similar concept, but wow, right down to the nitty gritty. I mean, I love stuff like that. I love the simplicity. I love the precision, getting down to an hour. I mean, this looks fantastic. Screaming bargain. How can you charge this much, Tom? What's wrong? How can you?
Here's crazy. Here's the deal. I told him, I said, look, we got one shot here. Let's make it affordable for people.
Man.
Let me get into my beta club. I will teach them one big difference. It's not just an indicator out. I'm going to show you strategies using this. I've already been working on it. I got all the rules in place, and I'll hammer it out. And then, like I said, a guy yesterday sent me an email. He made double-digit return yesterday. I'm thinking, he didn't listen. I said, learn a little bit. Learn. Wait till May 1st. They're using it right now. It's simple.
Tom, That's fantastic. Because I know as traders, many of us, we're sitting there, we're constantly looking for confirmation, right? When we're
Right.
about to make a big decision. And what a tool this is. You can throw confirmation out the window. This is your leading indicator, and you can move from there. Well, what a great presentation. Scott, Jeffrey, so glad to meet you guys, to see you here. I'm glad I had a chance to set in for Celeste. As I said at the beginning, she's got tough shoes to fill, but I really enjoyed the time that I spent with all of you today. Tom, fantastic. MTI by DTI. Everybody here, don't be the 252nd person trying to get this. Jump on this right now.
Yeah, the interesting thing, Carol, and I've worked with Carol, she's like I am when it comes to computers. She said, even I was able to download it. It was that simple. I'm telling you, it's a simple download.
Tom, you sell yourself short when it comes to this stuff, but I've known you for a long time, and there's nothing wrong with the KISS principle. Keep it simple, stupid. It works all the time. And I'm glad that you drive your team that way, because it makes it easier for everybody to understand.
Look, you're making big money decisions. You got to have a process, and you got to go through that checklist that says, hey, I got confidence in making this trade. Now, sure, every trade's not going to work, but at least you follow in that process about keeping the emotions out of it. And I think Scott alluded to that a little bit, because he likes to keep the emotions out of his trading. That's very important, because if you let emotions happen, guess what happens? You always make a decision at a bad time. Now I got to tell you a side story before I go. Okay, so I'm just clocking down money. IBM came out with earnings. I traded IBM probably for 20 years. It said IBM, if it broke 125 or something, it was a short. That's what it said. It went down, IBM went down to 124.42, and I just didn't even look at anything. I shorted it. Within 3 minutes on that going short, because I was arrogant, in 3 minutes I was behind, and I was only going to do like 100 shares on IBM. I did 600, okay? I was behind like $2,800, and I said, you dummy, follow the rules. It had to close below that line, not just poke its head down there. But anyway, it taught me, don't be cocky.
Absolutely. Well, gentlemen, once again, thank you so much for a fantastic Ask the Pro session. These are great for everybody that's here. This has been recorded, and it's going to be available to you. A lot of great information was shared. The market is in a sideways pattern, and all of these pros are sitting there going like, we're not quite sure which way it's going to go, but we've got tools that can tell us when things start to happen, we're going to be trading with confidence. And that's what it's all about. Thank you, gentlemen. Have a fantastic weekend.
Great session. You did a great job. Thank you.
Thank you, Tom. Thank you, guys.